The Oracle of Omaha, can you follow his lead? Warren Buffett, the Oracle of Omaha, is a legend. Known for his incredible investment acumen, Buffett has built a fortune that places him among the wealthiest individuals in the world. His wisdom and strategies have been studied and admired by countless investors. He's one of the world's most successful investors. His company, Berkshire Hathaway, has grown exponentially under his leadership, making him a household name in the world of finance. Buffett's journey to riches is inspiring. From his early days selling chewing gum and Coca-Cola door to door, to his first investment at the age of 11, his story is one of perseverance and keen insight. He started small and became a billionaire. His first significant investment was in a textile company, which he transformed into a diversified conglomerate. His strategy is simple: buy good companies and hold them for a long time. Sounds easy, right? But the simplicity of his approach belies the depth of his understanding and the rigor of his analysis. But is Buffett's way the right way for you? While his methods have proven successful for him, they require a level of patience and discipline that not all investors possess. Many try to copy Buffett. They follow his investments closely, hoping to replicate his success. They buy the same stocks he does. They analyze his every move, trying to understand his reasoning. They hope to get rich quick. But Buffett's wealth wasn't built overnight. It was the result of decades of smart, calculated decisions. But Buffett's approach is more than just picking stocks. It's about understanding businesses. He looks for companies with strong fundamentals, good management, and a competitive edge. It's about patience and discipline. Buffett often says that the stock market is a device for transferring money from the impatient to the patient. It's about thinking long-term. Buffett's success is a testament to the power of long-term investing and the importance of staying the course, even when the market is volatile. Playing the long game: Buffett's investment horizon. Warren Buffett, one of the most successful investors of all time, has a unique approach to investing that sets him apart from the crowd. His strategy is simple yet profound. Play the long game. While many investors are constantly looking for the next big thing, Buffett remains steadfast in his commitment to long-term investments. Buffett doesn't believe in get-rich-quick schemes. He understands that true wealth is built over time, not overnight. This philosophy is a stark contrast to the mindset of many modern investors who are often swayed by the allure of quick profits and instant gratification. He's in it for the long haul. Buffett's patience and discipline are key components of his investment strategy. He knows that the best returns come to those who wait, and that the market rewards patience. He buys companies he believes in. Buffett spends a significant amount of time researching and understanding the businesses he invests in. He looks for companies with strong fundamentals, good management, and a competitive edge in their industry. He holds them for years, even decades. Unlike many investors who frequently buy and sell stocks, Buffett's approach is to buy and hold. He believes that if you invest in a good company, its value will increase over time. He lets his investments compound over time. The power of compounding is a fundamental principle in Buffett's strategy. By reinvesting his earnings, he allows his wealth to grow exponentially. This long-term approach sets him apart. While others are focused on short-term gains, Buffett's focus on the long term has proven to be a winning strategy. Many investors are too focused on short-term gains. They are constantly checking stock prices and making impulsive decisions based on market fluctuations. They jump from stock to stock. This behavior not only increases transaction costs but also reduces the potential for long-term growth. They miss out on the power of compounding. By not holding on to their investments, they fail to benefit from the exponential growth that comes with time. Buffett stresses the importance of understanding your investments. He believes that knowledge is the key to successful investing. Invest in what you know, he says. Buffett advises investors to stick to industries and companies they understand. This reduces the risk of making uninformed decisions. Don't buy a stock just because everyone else is. Do your research. Understand the business model. Buffett's approach is to thoroughly analyze a company before investing in it. Make sure the company has a solid foundation. A strong foundation is crucial for long-term success. Buffett looks for companies with a sustainable competitive advantage. This knowledge will give you confidence in your investments. When you understand what you are investing in, you are more likely to stay the course and reap the benefits of long-term growth. Patience pays. Time in the market versus timing the market. Investing is often compared to a marathon, not a sprint. The key to success lies in patience and perseverance. Patience is key in investing. It's not about making quick gains, but about steady growth over time. The market rewards those who can wait. The stock market is a device for transferring money from the impatient to the patient. Buffett famously said, "The market will fluctuate. These fluctuations are normal and should be expected. There will be ups and downs. These are part of the natural cycle of the market. It's important to stay calm and not let emotions drive your decisions. Don't panic sell when the market dips. Selling in a panic can lock in losses and prevent you from benefiting when the market recovers. Don't try to time the market perfectly. It's nearly impossible to predict the exact highs and lows. Instead, focus on consistent long-term investing. Instead, stay focused on your long-term goals. Ride out the volatility. Remember why you invested in the first place and keep your end goals in sight. History has shown that over time the market tends to go up. Despite short-term fluctuations, the long-term trend is generally positive. By staying invested and being patient, you give your investments time to grow. Compounding returns can significantly increase your wealth over the years. Remember, Rome wasn't built in a day and neither are fortunes. Building wealth takes time, discipline, and patience. Stay the course and let time work in your favor. Unearthing value, the cornerstone of Buffett's strategy. Buffett is a value investor. He looks for undervalued companies. These are companies trading below their intrinsic value. He believes the market often misprices companies. This creates opportunities for savvy investors. But finding these undervalued gems requires work. You need to analyze financial statements, understand the company's industry and competitive landscape. This is where research comes in. You need to dig deep and understand the true worth of a company. Value investing is not for the faint of heart. It requires patience, discipline, and a keen eye for opportunity. The margin of safety. Protecting your investments. Buffett always looks for a margin of safety. This means buying companies at a discount to their intrinsic value. This margin of safety acts as a buffer. It protects you if your analysis is wrong or if the unexpected happens. It's like buying $1 for 50 cents. You limit your downside risk. The margin of safety provides peace of mind. You know you're not overpaying for your investments. This principle is especially important in uncertain times. It helps you navigate market volatility with more confidence. Is Buffett's way right for you? Finding your investment style. Buffett's strategy is proven, but it's not one-size-fits-all for every investor. It requires time, thorough research, and a long-term mindset. If you're looking to get rich quick, this approach definitely isn't for you. But if you're willing to put in the work, be patient, and think long-term, Buffett's principles can be a valuable guide. Remember, investing is personal and unique. You need to find a strategy that aligns with your goals, risk tolerance, and time horizon. Your financial journey a marathon, not a sprint. Investing is a journey, not a destination. It's about building wealth over time. Don't get caught up in the hype or try to chase the latest hot stock. Focus on your own financial goals. Invest in what you understand, be patient, and let your investments compound. Remember, you don't have to be Warren Buffett to succeed in investing. You just need to be disciplined, patient, and committed to your financial well-being. Start today, stay invested, and watch your wealth grow.